Hello and welcome back to the 4 Pillars Business Channel. Today we are on the third pillar of accounting and our topic is trial balance, or short TB. A trial balance is a report that is provided to your accountant and tracks all your accounts on your ledger. It starts off with the far left column providing the code. Then there's a description of the account. Following that, the opening balance for the period. Then there are either adjusting journal entries or reclassifying journal entries, which your accountant will provide. Then the close. And finally, perhaps a prior year comparative. Today, we are only going to be discussing the opening and the closing. In the next accounting topic, we are going to be discussing adjusting journal entries, reclassifying journal entries, and closing entries. Down the rows of the trial balance are going to list every account on the ledger. Generally, it starts out with your assets, and starting off with a current asset, notably cash. The next on the list is going to be any non-current assets, such as property, plant, and equipment. Then it's going to move on to liabilities, starting with current liabilities, such as accounts payable, and then non-current liabilities, such as loans. Moving down, we're going to be bringing in the equity section, where they are categorized as retained earnings, share capital. All of this is going to represent what is going to go onto the balance sheet. All of this is as at the date listed on the trial balance. The next section of the trial balance is going to be our income statement items. Starting off with sales, it is then going to list any cost of sales or goods sold, and then other expenses. Finally, it's probably going to end with taxes. The opening column is going to show all the balances, remembering that the balance sheet items are going to be as at, but the income statement items are going to be for the period ending of the same day as the as at. It is important that all your trial balance items are reconciled to other third-party sources, such as like a bank statement for cash or another accounts payable summary or the loan balance, because all of these have to balance off one another and capture any transactions that may also hit the income statement items. The income statement items need to capture all the transactions that have incurred throughout the period. How we know it's captured everything is that the opening column is going to total at the bottom, and it should equal 0. Debits and credits are represented on the trial balance, with items and assets such as cash generally having a positive balance and liabilities having a negative balance. Share capital as well, generally negative. Retained earnings could be positive or negative. Sales are a negative balance, and cost of sales and expenses generally positive. Positive represents a debit balance, where negative represents a credit balance. Your debits need to match your credits. Your adjusting journal entries are going to be summarized here and should also equal 0. 0 plus 0 must mean that the closing balance is also 0. Prior year should also be 0 too. Your accountant is generally going to want your opening trial balance to be as accurate as possible and your income and expense items to be as complete as possible. They will provide the adjusting journal entries, and at the end, they will provide you a closing trial balance. They are going to use this closing trial balance to create your financial statements and your tax return. Thank you for joining in. Feel free to message down below for any questions. Otherwise, join me in 4 weeks' time where I will be discussing adjusting journal entries, reclassifying journal entries, and closing entries. Thank you.